Hey there traders, Trader Tim from eMoney Mind here doing a Monday market analysis video. And as you can see on the weekly chart for the ES in front of us, in the last couple of weeks have been a lot different in terms of their candle patterns than we saw really for the whole first part of the year. And I think a lot of that has to do with some of the uh, economic unfoldings and news announcements that are sort of at this point over here, they were just sort of being talked about, and the deadlines and things like Brexit were not so close. They were far out on the horizon, and as we get over into some of these things coming to fruition, the market starts to get a little bit more volatile. Volatility itself is not necessarily that high, but if we come to the back to the daily chart, we can see that, you know, these periods of sideways consolidation certainly have their place. And I remember talking specifically back here in February about, when we get these sideways weeks, it's when we break out of them and then come back to them that their worth is really felt. And so you can see I've got the low to high drawn just from this swing low to recent high in the ES, and that gives us a 27.9650 that just happens to line up nicely with the sort of the middle upper end of this range today. We sort of stopped right on top of it. So we'll see if this support can hold us here, maybe rounding out and then moving higher. If we do break the 61.8, it's a very clear line in the sand, 27.80s, and then we can zoom out a little bit and draw a full retracement from lows to highs, and that gives us a 26.03 and a quarter. Now, zooming all the way out, this large weekly 50% retracement that's down here does have a target up at 32.15s. So even in the context of some pullbacks, that larger long still is holding. And hopefully on a weekly chart, there it is. So you can see, very, very big retracement, and that long 23.75 has traded and is holding. So, the bigger time frames always take the most weight. I give them the most weight, and a pullback in the context of a larger trend is still healthy. Today we had, if I go to a 30-minute chart, you can see the spinning top on the daily candle. 30-minute chart illustrates the sideways activity pretty clearly. I did want to pull up the market profile because if we look at at this point, the letters are not very what I want to highlight. What I want to highlight is trading up here, we had a lot of unfilled gaps below us. We can see all of these unfilled gaps. The blue line is the close, and the yellow is what was never traded since that close. And in the last 2 days, Friday is over here, and Monday today, right here, you can see how the sell-off took us through the gap down to the next gap from last week, and then today, coming down, filling this gap, and coming all the way to right about the close, filling, the unfilled gap up that was below us. So it's important to remember, or at least write down, or download the market profile chart that I put in the dashboard every day, so that you know where the gaps are, because those are places that we tend to go back to, and it can be helpful, looking at especially looking in terms of market profile, to see potential bounce points and short-term reversals that we might get, coming down to a start of a gap and then getting a bounce the next day, maybe opening up, and in this case today, like opening up in the middle of the gap and then having a few places that we could go to sort of establish a range for the day. and the market profile is a good way to kind of get a lot of that information and just interpret the chart a little bit differently. So you can see that big 30-minute candle today, first one, and then we stayed in that range all day long. So when you see a big 30-minute range, in this case it was 21 points, there's a much better chance that we'll stay within that range all day. Then you can look for shorts at highs, longs at lows, not taking trades in the middle of the range, as you guys have heard me say many a time. So tomorrow, be watching and really looking at today's high and low. So a 15 and a quarter and an 89.50. And I want to make sure, if we trade within tomorrow, if we trade within today's range, I will be very conservative. But if we can get above today's range, that would be a very bullish sign. If we break down, then I would look for, how do we break down? Do we break down in a big body candle and we trend lower, or do we just sort of break below lows, maybe put in a hammer, and then close back up at this 27.96s? In terms of news for the week, tomorrow's got a decent amount of stuff coming out. Housing starts, home price index, consumer confidence. Thursday is GDP, and then Friday, new home sales, consumer sentiment. So a lot of stuff kind of starting to come out, both here in the U.S. and internationally. So stay on your toes, and you don't want to get caught off guard. So establish that window that you're going to trade, the time period that you're going to block off for trading, and really focus. If you just sort of are wishy-washy and just kind of come to your computer whenever you have time, especially after hours, after the NYSE session, you can really get yourself in a pickle. So that's the best way I've found to really stay focused and stay out of trouble, is to establish the time window ahead of time. And typically the NYSE Open is the best time to trade. And tomorrow I'll be doing another live trading session, so you can tune in, look over my shoulder if you want. I can answer questions and things like that. You can check that out, emoneymind.com/VIP. So thanks for tuning in, everyone. Have a great week of trading. We'll talk to you soon.